Hello and welcome to The Trade. All right, let's get into the charts and have a quick look at what traders are watching out there. The first trading day of the quarter, a nervier hair ahead of President Trump's Liberation Day on Wednesday, with markets struggling for clear direction as Trump's new trade barriers loomed into view. US buyers snapped up more pickup trucks and sport utility vehicles in the first quarter in the run-up to President Trump's tariffs on auto imports, which could raise prices by thousands of dollars. The Trump administration began mass layoffs of 10,000 staffers at US health agencies, this according to multiple sources. And the number of migrants caught illegally crossing the US-Mexico border in March falling to the lowest level ever recorded, while Russia has ordered the Black Sea terminal handling Kazakhstan's oil exports to close 2 of its 3 moorings. Well, with US indices still in corrective territory, Violetta Todorovic from Leverage Shares sees ongoing volatility in global equity markets, and she caught up with Andrew.
We have seen massive sell-off across equity markets all around the world, and investors are wondering, is the correction complete and it's time to jump back onto equities, or if this current pullback that we are witnessing is going to turn into a deeper correction and possibly entering a bear market. So what I'm seeing at the moment is most of the US indices are down over 10%, which means that we are still in a correction territory. However, I am concerned that the relative strength index, unfortunately, has broken below their respective bull market support levels, which means that we could definitely see a deeper correction from here. So if we look at the chart on the S&P 500, although at the moment we are into oversold levels, I think the pain could extend a little bit further in the next couple of months. Very short term, we've seen a bounce overnight in US equity markets, so we can see a dead cat bounce in the next couple of sessions. However, in the next few months, I believe we will see an extension of the current correction. So for the S&P, first support arises around 5,400 points, and I see very strong support at 5,200 points, where the market will look very, very cheap. So instead of waiting for those bottoms, I think tactically we can start positioning and accumulating around current price levels, with upside targets for the S&P by mid-year around 6,200 points, and potentially by the end of the year at around 6,400 points.
So, Violetta, are you seeing similar moves on the Australian market?
Yes, absolutely. Actually, the decline in the Australian market, it's a little bit worse than what we are seeing in America, with the XGO roughly trading at around 7,900 points. And also we are definitely in oversold territory right here. Of course, I'm expecting to see a little bit of a rebound in the shorter term to unwind those oversold momentum conditions. But my main concern with the Australian market is that the relative strength index, the RSI, dropped to around 20%. The last time we saw the RSI at 20% was during the COVID pullback. So the charts are telling us that momentum conditions are definitely deteriorating, and we are not in the bull market we were up until February. So given the deterioration in momentum, I'm expecting to see another leg down after we see the rebound, with potential downside target of around 7,600 points, where I believe we will find strong support. And on the upside, of course, towards the end of the year, I'm expecting to see gradual recovery and a retest of the previous all-time high of roughly 8,600 points.
All right, so Violetta, of course, it's been risk off in equity markets, and investors have sought safe havens, and gold has benefited.
Yes, I have been a perennial gold over the last few years, and despite gold trading at around close to $3,200 an ounce, I think the bull market is far from over. In the very short term, gold appears overbought, and I wouldn't be surprised if we see a pullback to around $3,000, where most probably we will see strong support arising. However, over the medium to long term, gold is in a perfect storm, and all the macro are pointing to higher price levels in 2025. So I think $3,500 an ounce is going to turn as a very conservative upside price target for gold. So investors cannot afford not to have exposure to the commodity. It's been outperforming global equity markets for the last 3 years, and we are going to see this outperformance in 2025.
So, Violetta, how is that translating then to gold stocks? Let's first take a look at West African resources.
Yes, West African resources is actually one of the standouts. We've seen a very, very strong and constructive uptrend with the stock. Current price is around $2.34, and the stock unfortunately had a massive run, and it's in overbought territory. So I'm expecting to see a little bit of a short-term pullback, a correction to around $2.13, maybe $2, which will be the level I would be looking to start accumulating. I'm very bullish on the stock. I think it will perform very well this year. And my first upside medium-term price target is around $2.80. So buy on weakness West African gold.
And Violetta, another stock that has done very well in the gold space is Genesis Minerals.
Genesis is up in my favorites list as well. Current price, it's around 370. Also, it's in overbought territory, similar to West African gold and similar to gold. So I believe in the next week or so, we are going to see a short-term pullback, which is a healthy correction within the major long-term uptrend. So if we see a pullback to around $3.30, that would be very good entry point for investors with upside price target over the medium term at around $4.20, so plenty of upside. And those are not the only two gold stocks which are looking good. The list is pretty big, and Australia is blessed to have so many good quality gold stocks, so investors can just pick up their favorite, but we definitely need some exposure to gold.
All right, plenty to choose from there. Away from gold, Violetta, let's then focus on some of those stocks that have suffered in that market pullback. The first one being is what we're seeing as far as Goodman Group is concerned.
Yes, Goodman Group, it's a good quality stock, and it is becoming extremely interesting at current price levels. We've seen a massive decline over the past few months, with the price currently trading around $29. However, there is massive support at around 26, which would be excellent buying opportunity for investors if it gets there. So instead of waiting for further weakness, I believe the current weakness, it's already presenting great opportunities for investors to start accumulating. I think the recovery will be gradual. First upside I see in the near term is around $32. Then in the next few months we can see a recovery to 36 and eventually to 39. But I think further interest rate cuts from the RBA will support this quality stock. So I'm very happy to start accumulating around current price levels.
And Violetta, just finally, another stock which has been a favourite on the ASX has been Pro Medicus. It has also taken a tumble. Is there a buying opportunity here?
Yes, I think if I see the share price at around $180, Andrew, that would provide really good entry into the stock. It's already into oversold territory, and I can't rule out a little bit further weakness from here, but the stock is already very attractive. So I'm comfortable to start accumulating with a rating of a strong buy at around 180. I think in the next couple of months, we will see the stock trading at around 240, in the next 6 months to around 270. And I think by the end of the year, we can reclaim the previous high of around 299 and potentially try to reach a new record high. So Pro Medicus, it's really looking quite good at the moment as well.
Violetta Todorovic speaking to Andrew earlier. That does it for this edition of The Trade. Be sure to join us next time.